Hello, everyone, and welcome to our live stream. Those of you who come to this channel reasonably regularly will know we've had a bit of hiatus for all sorts of reasons, both personal and professional, which I won't bore you with. But suffice to say, we are delighted to be back, myself and my husband David, and we hopefully, fingers crossed, all being well, and life doesn't throw us another curveball, we will be back on a more regular basis. And what we're going to start with today, and probably for the next few sessions, is we're going to go back to the forex market. Obviously, the London session is well underway. All sorts of things are happening in the world of currencies. And as always, we will be looking at various charts through the prism of volume price analysis. That is going to be our main focus, clearly. And we're also going to look at a couple of indicators, 2 or 3 new indicators that David and I have developed specifically, what we call them volume indicators. We're going to be putting them together in what we call the VPA package. It's not actually available at the moment on our software site, which is quantumtrading.com. But they'll be coming in the next week or so. But we'll be showcasing some of the indicators in these sessions. A lot going on, obviously, market generally, not least with the disruptive effect. Disruptive could be positive or negative by Donald Trump. Those of you who were in the markets the first time he was president will remember the impact that he had on the markets, as I said, negative and positive. And it's certainly been the same this time around, although I would say probably with a more impact, not least there's also the geopolitical stresses that we have at the moment. And of course, we have this huge new policy that he is now enacting in his second term, all to do with tariffs. And that obviously has an impact on all the capital markets, not least the forex market. So lots of trading opportunities, lots of volatility. But as we always say, volatility can be your best friend and your worst enemy. On a local basis, what's been happening is overnight we've had an interest rate decision from the RBA, and it's nice to see the central banks impacting the market, giving them a surprise and a bit of a shock. The consensus was, as you can see from your economic calendars, that the RBA was expected to cut interest rates very slightly. It didn't. It held, and the Aussie dollar actually rose quite strongly. Moving to the London session, we're going to be looking at cable. I've got the pound yen, and if we've got time, we'll also look at that Aussie currency and see how it's been behaving against its various counterparts. So, moving forward, today we are just going to do forex, but what we're also going to be doing is we're going to be looking at crypto. I haven't got my book with me to show you, but if you go on Amazon, I actually wrote a book about cryptocurrencies. It's about 10 years ago, David, would you say? Yeah, it was about 10 years ago. And it was really the cryptocurrencies that were available at that time. We looked at them and we demonstrated how you could actually use volume price analysis for trading them, because the system, the methodology, as long as you've got a chart and you've got price action and you've got volume, then you can make an analysis of where you probably think the price is going to go next. And it's very interesting to see that some of those cryptos that we mentioned at the time as kind of ones to watch have actually done extremely well. One of them is Monero. And so if I'm sure crypto is not new to you, but if you want to sort of have a sort of trip through memory lane and go back a bit in history, the book is still very valid for what is going on in the market today. And I think that the book actually concluded, it was very much a pioneering technology, a pioneering look at how maybe the financial world was going to change. And as always, it was Bitcoin was leading the charge. And I think I think the book ended with the thing with sometimes the pioneers don't always end up being the ones that consolidate and move forward. So far, Bitcoin is still leading the way, and it doesn't show much sign of slowing down. But it's early days, and we shall see. But we're not going to do crypto today. I very much want to do it in future sessions. And as I said, look at some of those cryptos that we highlighted in that book. I'm just going to pass over to David so he can do a little bit of an introduction. And I think the best thing we can do is go straight to the charts. And of course, if you've got any questions about volume price analysis, or if you're trading any particular pair, just pop them into the chat box and we will see how we can help you. Hold on a second.
Good morning, everyone. Well, it's good morning here, but it may be wherever you are in the world, very warm welcome. And I have to say, it's wonderful to be back. I had some health issues over the last few months, which is why we've not been around very much. But thankfully, they were resolved, and I'm now back to full strength. Well, more or less, anyway. So it's good to be back, and we will be doing these on a regular basis. Very much around forex and also, as Anna said, cryptocurrencies as well. Because I know in the comments, I think one or two of you have mentioned about VPA. It can be a little bit confusing. You're struggling with it. All I can say to you is this: that what it takes is a lot of practice, which you may or may not want to hear, but it is practice, practice, practice. And one of the best ways of doing that, when Anna and I first started with VPA. We didn't have the luxury. There was no internet. We had satellite connections, and everything was done by phones when we were placing orders with our broker. Long time ago, almost 30 years ago. So things have changed dramatically, and I think when we were learning, we had to practice. It was a little bit archaic with paper charts, printing them off, covering them up, and then reading the candles and the bars bar by bar. All that's changed now. It's very much more straightforward. And I think the easiest, one of the quickest ways to learn is to go to fast time frames, perhaps not down into the world that I inhabit a lot, which is sub 1 minute, down into 15 or 30-second time frames. But certainly, a 1 minute chart, 2 minute chart, 5 minute chart, whatever. Those candles will unfold and the price action will unfold relatively quickly. And it's a great way to practice, particularly on something like a 1 minute chart. The candle comes in, you see it formed, and then you're on to the next one before you know it, and then on the next one. And it's just a great way to learn. So if you find it difficult, that is what I would recommend. Find a good platform like TradingView. We're going to concentrate on here, but MT4, MT5, just the same. Practice on those fast time frame charts. Of course, you've got Anna's books up there. The VPA, it's almost become the Bible in the industry for volume price analysis, written in 2013. And it's a great introduction to VPA. If you've not read it, it's up on Amazon, it's in Kindle, it's in color now as well, and also in audio. So if you want to listen to it, it's on audio. Anna recorded that, I think, back end of last year. Got that up early part of this year, I believe. You've also got, so you've got a lot of resources there on Amazon. There's also lots of examples books. There's a 200 worked example book for stocks. There's a 100 worked examples book for Forex. Then you've got the education programs over at quantumtradingeducation.com. So if you want to take a deep dive, hop over there. And finally, we also do the one-on-one coaching now. But that is very selective. We don't take very many students on because it impacts our own trading time. But again, if you want to really, truly get to grips with VPA, then that is another option for you. I'm going to mute off. I'm going to pass back to Anna and we'll get going.
We're also going to keep these sessions relatively short. We're going to get as much in as possible, so that'll allow us to do them a little bit more regularly. Now, I'm going to share my screen straight away. So we've got a bit of a catch up to do with with what's been going on. And if you ever find yourself in a situation that we have been ourselves, because life just gets in the way, you have curveballs, you've got health issues, etc. Sometimes having a bit of a break can be actually a bit of a positive thing. But if you want to, just keep an eye on what is going on. What I've actually found is get yourself a really nice a group, if you like, of resources. Those of you who follow me on X will know I have I've curated a bunch of people who I respect in the industry, who I can trust, and even when I didn't have time to look at the charts and stay actively participated. I knew that I could just dip into my feed, and I know these people would keep me up to date. So, because what I'm trying to say is, you really don't want to depend on mainstream media. Make sure you've got yourself a good news feed. I have Financial Juice, so it's just to sort of keep an eye on what is going on. And then when you do come back, as we've come back on a full-time basis, that enforced break, stressful though it was, sometimes it's actually quite good for you, because it allows your brain the time to have absorbed everything that has gone before. And even if you've been doing this as long as we have, sometimes we just need a break. On this occasion, it was an enforced one, which wasn't of our choosing, which was perhaps not the way you want to do it. And from a learning perspective, if this is new to you and you're studying hard and every day, and you're doing a little bit, and that's great, you're practicing every day, you're trying to make sense of the markets, you're trying to make sense of analysis, you're trying to fit it into the rest of your life, particularly if you're still having to earn an income. A breakaway, and I'm not just talking a day or two, I'm talking a week or maybe 2 or even 3 weeks, and then you come back. You'll find it gives the brain time to actually sort of have really absorbed your observations and your learnings, and you suddenly find something that didn't make sense to you maybe 3 weeks ago will make sense. And the reason I know this is someone made a comment on X, and I thought, oh yeah, that really makes sense. She's been trying to learn a really difficult piece of classical piano music, and she's practicing every day. She's not she does this for pleasure. She's actually a very eminent market analyst, and she didn't think she was making any progress, but she kept practicing and then she had to take a break, not of her choosing, it was to do from work. When she went back to this piano piece, it was a month later, she found it all came back to her, and it was a lot easier. And no one can really explain why that is. And from our experience, it is just, I think it's just giving the brain time to relax. So we're back. What do we do? Where do we start? And this is the Dixie, and the what has been happening with the US dollar. As you know, if you've been following, which I hope you are, what is happening in the States, and in particular, what the new Treasury Secretary has been saying. He is certainly someone you should keep a very close eye on, not least because he has a very, very interesting backstory. He was one of the team who worked with George Soros, Stanley Druckenmiller, that was instrumental in driving the British pound out of the ERM. Now, most of you who come along, I know, will be far too young to know what that is all about, but it was called Black Wednesday. The ERM was an artificial construct with currencies. They all had to keep within a certain trading range in what was called the ERM, and they saw an opportunity that the pound, it was going to be unsustainable, so they attacked it. And I think George Soros he was known as the man that broke the Bank of England and the British pound. And I think they made a cool few billions. So he's a bit like a poacher turned gamekeeper. He has, I don't know if he still has a hedge fund. He's a hedge fund, hugely successful, but very, very knowledgeable about the currency markets and how the manipulation of currencies on a macro level is used by central banks, governments, to drive their economic policy. So, if there's one thing you take away from this session today, is please, please, please make sure you have a good understanding of Scott Bessent and the aims that he and this administration have for the US economy. One of which is a weaker US dollar, because they want to lower the interest rate. So there's a lot of political tension between the administration and the Fed. The Fed is nominally independent, so we shall see how that plays out. So he's a very, very clever man, and certainly well worth listening to, because he doesn't. It's not like Yellen and the previous Treasury secretaries. He does actually. If you listen to him, he's very listenable too. Right, so we've got the Dixie here. What has been happening? This is clearly the weakness that we can see. I have the monthly chart, and the reason I put the monthly chart is because of where the Dixie is trading at the moment. And this is something I commented on my X feed. This has been the weakness. This is since January of 2025, and these are the lines that these yellow and this sort of teal colored line, these are my own lines. These are my support and resistance lines that I do on the slower timeframes, and there's a very good reason for this, is because, as we always say, support and resistance, key plank of volume price analysis. But when these key resistance lines appear on the faster time frames, we really do have to pay attention, because whatever your analysis might be, even on a 5-minute chart, when the price comes to one of these points, one of these levels that is so important on these slower time frames, you can bet your bottom dollar the price will react. It will stall, it will pause, it may even be the point of reversal. Now, these are the lines I've put. Let me just take off the volume point of control, because I don't really want to deal with that today. I want to save that for another. I'm just going to, let's have a look. Hold on a minute. Let me just see. Let's change it off. Take it off. There we are. Where are we? Let's take, and the one thing I do like about TradingView is that you can simply take the indicators on and off with a click of a button, which certainly makes life a lot easier. And it would make a life a lot easier if I move that out of the way. Right, there we are. Let's move that out of the way. Right, so yellow is for daily levels, and you can see immediately that it gives us the market structure, it gives us the geometric structure, it tells us, well, where were these important reversal points. We can see here, this level here, and if we go over to the left of the chart, the more times it has come into play, the stronger that level. Now, this one is a level that I put in on the monthly, it's actually a monthly chart, and that's why it's in this bluish color. And the reason I put it in is because obviously we had that fall, then we had that bounce back with the Dixie, and we had a lot of volume on there. So what can we expect? We also had a volatility candle that is clearly buying, and we did have a bounce higher, but it actually ran into this daily level that I had here, and since then it's fallen. But what is interesting, what do we see on this chart that tells us that maybe could we be looking at a potential reversal for the US dollar? Well, for a start, we have falling prices. We had buying coming under this candle. We know it's buying because we have a big wick to the bottom of the candle, and we've got decent volume. Nothing like the volume over here, but let's keep it local to the last 6 months or so. We had an effort to rise, it collapsed again, and we had another fall, and it actually broke through this level here, this low, which potentially could now be support. But what is interesting, as we see here, is we have falling prices and we have falling volume. What is that? This is a classic VPA anomaly. And what I have said is this level now has become resistance. We have this anomaly, but it is still resistance. What we now need to see is whether this anomaly plays out, don't forget, this is the monthly chart. We're only right at the beginning of July, and we've got all the tariffs going on. There's so much going on, and I know we've got summer coming, and they say summer markets are quiet. But to be honest, given what's going on in the world, I think, and it used to be summer markets, you could say, right, I'm stopping trading. I'm going away for 3 or 4 weeks, and I'll come back in September on Labor Day, which is when the markets generally sort of pick up again. But these last few summers, you only have to look at the charts, and it really hasn't followed that pattern at all. So what do we see? And what I've said is this: that support has now temporarily become resistance. But given the anomaly, we are on the monthly chart, you do have to remember, if the US dollar stops falling, at least stops falling, and manages to get over this level, and we have the volume to support it, what do we see back in this chart? And if we look here, all the way back to, I think it's March 2022, it was actually the start of another rally. Now, does that mean it can't fall anymore? Yeah, it could. It could congest. It could fall some more. We can go down. We can see more levels that would come into play. As I said, these are very, very long-term levels. But it's just interesting that we had this fall, and by the way, based on the COT data, the dollar has never been so oversold, and we all know this is a market of mean reversion. And when when a trade is so much weighted to one side, either overbought as it was here, we had this huge rally coming here, overbought or oversold. What does that what happens? That tells us there is likely to be a snapback. It's inevitable. It's just, in this market, possibly much, much more so than any other market. So that is the Dixie. Keep a very close eye on it. See what's happening with the levels and how it trades. This is on the daily chart. Let's have a look. Here we are on the daily chart. And as I said, something you should have on your screen at all times. There's all sorts of things you should have on your screen, but certainly have a look at the Dixie. Now, some of you may say, well, the Dixie, it's not an equal weight index. It is heavily skewed towards the euro. So if you're a euro dollar trader, even more reason to keep an eye on the Dixie. Some of the other currencies are only represented, they have only a very small weighting in this index, but still it's enough to tell us that, there may be, I'm not saying there's going to be a dramatic reversal tomorrow. All I'm saying is just look at these longer term charts. And if these levels appear on your faster time frames, then, they will have an immediate impact. Right, I'm just going to pass over to David because I know he's got something to say. You're going to do cable? Okay, it's on pound. Oh, great. Oh, it's hugely oversold. In fact, what we have here, our trusty currency matrix, it's the most oversold. And the strongest is the Aussie dollar. It's really all about the Aussie, or the Aussie. It's buy the Aussie. And that's this one decision based on the RBA not reducing interest rates as expected. I'll just stop sharing. Is that okay?